and you have a market morning that's gapping down, right? Gapping down over, and for me, the mark's 1%. If it's 1%, I'm going to go through every position I have, and I'm going to make sure that I don't have a hard stop that's going to trigger on the open. And so if you've been coached and you ever ask like, well, should I move my stop? Your coach will be like, no, we don't move stops. We don't. That's, I always think to myself, unless we do, right? Why? Because I know for a fact that even if 20 minutes from now the price is lower than it is on the open, I'll get a better fill working my way out manually than if I stop out, meaning the market maker just gets this gift. It's a gift. You wrapped it up nice and packaged it and handed them as gift. And the gift is you. Here, take advantage of me. You'll get horrible pricing. It's an interesting thing because there's times. Tony said did that yesterday. Yeah, I don't watch it and see, because that initial price it's so bad. There's a time Tony was like, I was going through this exact presentation and then the market opened, and then if you're on Thinkorswim, you know what happened next. Right? The market opened, ding 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 ding, and then the next noise I heard was bring, and I'm like, oh shit. Right? Oh no. Something got left behind. And I went and I looked at the price and I was like, oh my God. Like, is that legal that you could do that price? Like, what? And so anyways, and then I looked at the price, and then I looked at it 20 minutes later. And my rule is very specific, because I want to give it a couple of things. A, I want to let price settle down, and B, I don't want to bail if the 20-minute opening range is going to pop it back in favor. And now I would not have much expectation for that. Now that our market posture's dropped down to a 1 point, whatever it is, 1.75, 1.5. But prior to the last 6 weeks, for the last year and a half, our posture's someone said we averaged 4.5 or 6, depending on which period of time. In that market, I'm going to let it. It's most of the time, I either get a better price or I actually stay in the trade, and it recovers. And it's man, I avoided taking an unnecessary loss at the worst possible level. So anyway, I think it's always good to stop and have that conversation when we have a red morning like we do today, obviously. So good morning, everyone. If you've come late, welcome to the Market Watch Group Monday Market Kickoff. My name is Scott. I will be your host. As always, education, illustrative purposes only. We do not give recommendations to buy or sell any security or financial product. We're not brokers. We're not advisors. Blah, blah, blah. Agenda, opening futures and news. What is that's red? What's the news? Everyone is either worried about tariffs or tired of tariffs, or I don't know how long it takes for the pressure to mount around this strategy. It seems to be economically unsound and foreign policy unsound. Hey, Bob Walker. No, Zoom. Yes. There was a circle meeting not too long ago, and that was a mistake meeting that I accidentally forgot to move. But they should all be Zoom now, because if you're on your phone, the circle doesn't play well with mobile. And so we want to make sure that you're able to jump in, and Zoom is much, much better for the mobile. So for now, that's the solution, but certainly open to change as the platform progresses. Mindset for open trades. Yeah, I'm gonna watch and see what the damage is. Watch the 20-minute opening range, and then watch to see what we get from there. What I do know, having traded. So here's a question. Sound off on this. Good morning, El Jago. Good to see you. Sound off on this. Did you trade during the last Trump administration? Like, right? Did you actively watch the market, assess? Were you trading then? Because that was, 8 years ago for the start of it. And I'll tell you what, that time, he could do no wrong. I mean, the market was magnificent, right? If you were 2017, that's what it was, right? 2017? 2017. So 2017 was like, when I go show a textbook VIX of like, here's what I would love my VIX to look like. I show 2017, first year of the Trump administration, part one. It did not. It did not look or feel like this. So anyway, yeah, interesting times for us as traders. So opening range, what are the implications? We talked about those opportunity lists. I have a few bullish things that if this market recovers today, I might think about. It's tough because to want to put bearish trades on, I want to see it. I don't want to be late. Like, oh man, you know what? Let's just get bearish now, because if you do that, bam, market's going to have a rally, suck you out of that. You end up getting whipsawed around. So don't chase bearish trades, despite whatever temptation you might have for that. All right, let's dive in. Let's go look at those futures. Did we have any news today? No, there's nothing, right? Yeah, nothing today. Let's take a look. If I were to look at this guy, the way he's staring at those charts, he doesn't look happy. And then I look over here and I'm like, oh yeah, look, the S&P's down 1.3. Dow 1.0, NASDAQ 1.5. Ouch. Russell 1.1. Okay. U.S. tariffs heighten recession risks for North American economies. Yeah, I don't see how you like come and blame the previous administration when literally everyone is blaming your only economic policy. Is like, that's the reason. That's the reason for inflation. That's the reason there'd be a recession. And I'm not sure anyone really knows what the like objective is. Like, to stop fentanyl and at the northern border? Is that what we're saying? Anyways, I'm confused. I'm certainly open to anyone who has a perspective that's going to enlighten me. However, from a trading standpoint, it does put us in a bit of a dodgy position, as the British would say, because we can get whipsawed pretty easily. Here's where we are. You can see one of the things we talked about in our posture was over the last 12 days, we have not had one time where there was more than 1 day of buying. We got a buying day, and immediately it was engulfed the next day and then dropped again. Then we got a buying day, and even though it's a funny thing because it didn't engulf, but they ended up in the same place. Let me show you what I mean. This one started up here but ended slightly below the previous day. This one ended below the previous day, never started up in this area, just gapped down and then just stayed down. So same reaction. Yes, exactly, Miguel. We did get a nice one on, courtesy of my friend Gary. Real nice. I liked the trade. I made a few changes. I was like, "Are you okay if I make this change and this change?" To get it into a little bit more of that short term that we like. He was a little further out in time, a little more conservative than I tend to be. So if you were like, "Oh, Scott, that sounds great," you should have just let it go. My bad. My apologies. But yes, as Miguel pointed out, IBIT is down 5% on the open. Nice to see for a bear straight. Okay. So, for the third time, we have a buying day followed by ending lower the next day. Buying day ended lower the next day. Buying day, well, we'll see. Started lower. Is there a chance this time we start lower and actually recover and start to establish a support in here where that, even though it because it gapped down, it won't look like a hammer, but that would be a bullish engulfing, which would have a very similar implication. So we're not going to make a lot of judgments off the opening price. If you're bearish, you're happy. If you have any bull trades, you're like, this sucks. It is what it is. This is what we're. If you missed the posture yesterday, let me just review real quickly. That's a better place. Our long-term score dropped. Our short-term score dropped a half a point, which is fairly significant. Volume miraculously stayed the same. Major market stayed the same, but it's already at a neutral point. Sector rotation dropped to neutral. The VIX dropped to a 0.5, just barely hanging on. We're at a 125. I didn't realize. 125. So it's not great, right? Well, this is my assessment here. We went from this struggling to hold bullishly. We were really trying to hang on in that 4 to 5 level, and then we just broke it, and that's it. Like, that for me was enough. I still think I'm going to try to put on at any given time. There could be a V bottom rally from news of like the trade war is like, because imagine, right? It's super easy. He's like, he can just come out. I'll let him. I'm fine with this. Just come out and be like, everybody has agreed to everything I wanted, so the trade war is over. I won it. Great. I claim it. Claim victory. Just put the statement out. The right people will believe it. And let's just let the market prevail, right? Let us get back to trading. That's my hope. Just call victory, man. You won. You did it. Everybody is scared. So claim you won the trade war. Pull the tariffs off. Let the free market prevail. Anyways, but in the meantime, what do we know? We're down in a 125. What are our expectations in a 125? It's not much, right? If our expectations, if we were like, hey, this is going to be a choppier, harder market to trade, what are you going to do? Trade less. It's first and easiest step to take when we move into transitory markets. It's trade less. Control your risk. That's it, right? If I was if you were meeting with Gary or Glenn, who are still doing some one-on-one coaching, if I was still doing one-on-one coaching and I met with someone today, that's what I'd say, right? It's the only thing that we can do. Control your risk. I'm not gonna stop. To me, it's like if you're at a poker game and you're like, whoo, I'm a little bit low stacks. There's a few real quality players at this table. I mean, I guess you could walk away, but then you're not going to win. You can't. Then you're just not participating, right? I'm just going to play a little bit more conservatively. That's it. And we'll see what happens. And then, because conditions change, then I'll start to be a little more aggressive. I'll be like, oh, everyone's playing tight. I'm going to start to play a little more aggressively now. Right? So that's what we're looking for. Okay. Yeah, but one of the biggest things that at any given time we should be doing is setting expectations, and then our risk and things like right now, think about everything that's changed. When and how you start to pare down a trade, right? We're not going to push and be like, oh, let's see if I can get 5 straight days. If I get 3 days, I'm like, oh, snatch it. And I'm going to take half of this thing off the table. That's the second adjustment. 3 months ago in our bull market, we would take hey, let's take one contract off just to ease a little stress, tighten the stop, let it run. Right now, it's like let's take half off, maybe even 2/3. I'll let one small piece of it run, and if it does something, great, and if not, I'm out of there. So how we manage trades, expectations. Right? Am I like, oh, I'm looking for 4 to 1s? I'm like 2.5 to 1. If I can find it and it looks reasonable, what else do we have to worry about? Your option strategy, as Press said about the VIX. Sorry, Press. As Press mentioned, the VIX came in around 26 this morning. Yeah, we're pushing these. We're pushing up near this high range. Now, we recovered from this just fine. And there could be an opportunity here as well. We're not even above Friday's high as of now. So am I like, oh my gosh, all hope is lost? No. It's early in the day. So yeah, but yeah, certainly not stoked about what's going on in the Apple trade. Am I gonna bail if it looks like this at the end of the day? I mean, we saw in establishing this support level, we saw this. So intraday, it was down here while establishing this support level. I can't take my eye off of that. If by the end of the day this recovers back to this level, puts a hammer in, it's another one of these, then it's still holding support, and I want to see the trade. It is a time positive trade, a spread trade with the vol high. Let's see what happens. Certainly not going to panic and take my loss early in the morning and get smashed by it. So let's go look at that IBIT as well. That's a little more fun. 5.5%. So yeah, right. But I want you to notice what really made this feel right was first and foremost the failure of the buyers in this push. That's the first thing that I want to see is, did the buyers do something to try to get it up here? And then it failed in this, and not surprisingly for me, in that 50 to 100 range. It bounced off the 200 and then it stalled out in this range here. And now what? Well, we'll see if it breaks the 200 now. Next stop is, I don't know, probably this level. Where does that put it? Yeah. Okay. We get down near 42. I'll probably snatch some gains. What else happened? Well, you can see we were in here and we got that confirmation. We didn't wait for the confirmation. That just came today because we can't really wait for confirmation on bearish trades the way we do on bullish trades. As far as at least from the stochastics. When we're bullish and things are walking upstairs, yeah, wait for the stochastics to cross. Nice confirmation piece with a good bullish candle. Here, we did not. Here, we had price action starting to turn, and we said, okay. It's a little more anticipatory. Why? Because if we missed it, by now, it fell out the window already. You can see exactly what we're talking about. So, does that make sense? I hope it does. Okay, so those are a few of the recent alerts. A couple of the recent alerts. Let's go talk about, well, let's just go through the whole list and see what's forming. This is one that I actually was like, hey, I'm thinking about this. And so especially if the market recovers and this thing pushes up around this level, yeah, I think, why not? This has got a great looking trend right now. AEE looks nice. Someone gave that recently. If it was yours, take credit for it. Take a bow. Amazon, nothing. Baba. Kind of looks like it's double topping here, right? And I think to myself, if this thing like falls and then comes up, and let me draw it. So if I've got this here. If this falls, and it doesn't have to break by much, and then it comes back up in here, and then like rolls again, yeah, there's a good chance this is supposed to be like $100 to $110 stock, right? Maybe the market had it right back here. Maybe the news that caused it to jump from 100 to 145, and it was just a little bit too much. Great. We can make some money on that pullback, especially if the general market is moving in that negative direction as well. Bank of America. Right? A failed attempt. And when it failed, where did it end up? Right back where it was. Very, very commonly what happens on a failed reversal. BX, same kind of a deal. Lower lows, nothing there. Financials don't look great, except credit. We do like Visa, but credit stands differently right now than banks and brokers. Caterpillar, we've seen a little bit of a nice little spark of life in the industrial sector. Why is that? Press asks. Well, because it's almost a defensive type thing. I mean, they're not. They work in growth as well, but the defensive quality of Visa and MasterCard is the amount of credit usage that increases during recessionary type environments, right? The indomitable U.S. consumer tends to just find a way, and usually it's through credit. So they've already seen, and so those as long as there's not tons of defaults, and I mean they know their model, right? They know how much default and how much they'll write off, and they're cash cows, Visa and MasterCard. And we'll see that here in a second when we look at them. So we're seeing a little bit of spark of life here in Caterpillar, also in Fastenal in a minute. Nothing in Sienna. Nothing in CLS. The Merck. Oof, there we go. We were looking at possibly this pennant. It's definitely breaking, but if you're not already, I know someone's already in this thing. If you want to get in as a continuation trade, my thought would be switch to the Heikin-Ashi. You can see you're just getting a brand new one here. Volatility is like high for CME, but not overall that high. But yeah, you could put on a trade, put a stop underneath, and just see if this thing's going to keep on grinding higher. It looks nice. Is there anyone who has CME on now? That's working kind of on its own. Cisco, I just kind of go back and forth on this. I still think about it. I wonder if this is enough, right? Is there enough meat on the bones for this little move? Because I don't really get much more than that. Maybe this was a little bigger back here. And this one, I don't know. Not in this market, though, right? CME up nicely. Delta, no. Diamonds, no. I mean, it's just the Dow. It's just the Dow. What else? Duke. That was it. Friday was the day. Did anyone catch it? Friday was the day for this one, and it's moving again pretty well. There's Fastenal on the breakout. Starting to slow down maybe with this candle. Eases back. We've got a nice window. I'd love to see something like that. These things come up. Yeah. We'll see what happens. FHN continues down, now all the way to the 50. FI down to the 100. It's broken the 50. This one still has something. I don't know. Maybe I would think about a trade that tries to get at least back up to the old high and then I don't know, see what happens. I'm open. I'm open to different types of trade ideas. Flex is a no. Fox, still viable for me. Anything above the 50. This is my last high. This is my last high right here. And this thing is it's pulled back. Give me the turn. Me and Lee are waiting for this, and then we're going to jump in. The rest of you are welcome to join us. Am I right, Lee? GE Vernova. No. What do we think about gold? It's kind of lost its shine. Lee said yes. Hell yes, we ride. Google. No. You see how it wasn't enough to see this thing like, oh, look at it bump its head under the 200 and then just, it's got work to do, Google. Goldman. Nope. Hood. I hope you're starting to like find yourselves where like you see something like you see this and you're just like it's just grinding to new lows. I'm not going to try to predict this just to have another round of that. This is the consolidation. Let's make sure it breaks and does something like this. Then we can start to go, right? Then it's a different ball game that we're playing. HTHT. Yeah, I saw that one and I just was like, I don't know. It kind of felt like the hiccup was still there. XLE. Okay. And did some energy-based trades like it. HWM. That's another one that could hold and could have old highs as possibly establishing our target level and see if that gives us a trade we'd want to speculate on. Things that still have some strength. IBIT. Nice. Okay. I mean, it's gap down. It's holding the gap. We like to see that. IBM. So if you were channel trading, if you're just like, I'm going to trade the channel. I'm not a big channel trade person. I'm going to tell you that right now. You probably guessed that earlier. But you're just basically like, I'm going to buy it like right at 250 and then sell it right at 265. That's the channel. And you would even actually short it at 265 to see if it's going to come back down. That's the channel, right? And so you're like, short it here, buy it here. So, okay. I don't know. It worked, but that doesn't mean it's interesting to me. ICE. ICE is setting up nicely. If today turns bullish, this would actually probably give a signal towards the end of the day, right? Like that. And this would probably turn and you would be like, oh, hey, what do I think about that? I think it's viable. Would look very similar to that. And that gave a nice little 1, 2, 3, 4, 5. Nice little 6-day move. Nice, almost 10 points. So what would I look for? Right? Hopefully that gives me 2 to 1, 2.5 to 1. I'm not looking for home runs right now. I'm just trying to get on base. Hope the guy behind me moves me forward. That's it. Nice conservative strategy right now, right? Small caps. Okay, small caps are kind of holding. They look terrible right now. We all know that. KWB just kind of moved without us. Nothing you can do on something like that. But Coca-Cola, I think Coca-Cola could be looked at. This would probably be our last opportunity. Bam. You have your last red, first white, first momentum. These are Heiken Ashi candles. If it looks like a doji, that's a transition candle. This was the last red. You can see it doesn't look like it looks more like a hammer, but still kind of in that vein. Last red, first white. These bigger body with no shadow, like this one, all of these. That's what I would call a momentum candle. So I have the first momentum candle, which would let me take my stop and maybe put it right there. And whatever I get, I get. Last time it was able to produce 64 to 71, 7 points about from where it was started. So I'd say, yeah, maybe high 70s. High 70s as a potential target. I think that's viable. It's defensive. I'm definitely eyeballing that one for today, you guys. Gilead. Let's take a look. I'm not too far beyond the G's, so I feel reasonable putting that up. If it was too far, I'd be like, we'll have to wait until tomorrow. I'm just kidding. Okay. Oh, yeah. It's bullish. But for me, it's hard. Some people love when that stochastics is up, just up in that upper zone like that. What I would say makes this hard is waiting for the right signal, right? Now, if I take this to a Heiken Ashi, I bet all of this is going to be one big, long Heiken Ashi chain. I'm just building up some suspense. Hold on. There was one. And then again, and then it paused. So, I mean, yeah, you could kind of say, hey, this is the pause. I'm trading this. This helps because it can help you to just gain some perspective. And where are you going to put your stop? Are you going to ride like we said, everything's different in this market. The characteristics we're seeing have shifted enough that we're going to trade differently right now. If it strengthens back up, great. We'll readapt. But I'm looking for trades where I can get a nice stop and then be able to move that stop. And if it keeps going, if I get to a 2 to 1 point, I'll probably take most of the profit and then just keep tightening and let's micromanage trades right now, right? Okay, where were we? I like that. It's a good call out. Let's go to Kroger. Kroger had earnings. They did well. You're just kind of having to wait. Nothing you can do there. Here's MasterCard. Oof, even MasterCard now. But it's. I'm going to let it join that 100 club. Things that are holding the 100. That have a nice level that we could potentially build a trade where we get 2.5 to 1 there and maybe 1.5 to 1 there, something like that, right? That would be a reasonable trade, I think, given what we have in front of us. I think Visa looks better than MasterCard in this instance. We'll see. Meta, negative. Nope. Man, we loved some of these. Not doing so well now. We do not love Microsoft. I wondered if this was going to be enough, but at this point, I'm going to be like, nah, it's pretty much all the way back into the previous consolidation. NDAQ, you know what? NDAQ looks horrible, and ICE still looks pretty nice. So certainly, we're shifting our focus from one exchange to the other. I'm actually deleting NDAQ. I'm going to start. There's some things that we need to clean off the watch list at this point. The NASDAQ index, not exchange. This is the exchange. The NASDAQ index went into correction territory. So yeah, let's clean it up. Let's get rid of things that are going to not come back in leading positions, find things that are, so that when the NASDAQ does come back into a leading position, because it will at some point. Who knows when? Could go deeper. Could go bear before things are done, for all we know. But, right? And I think this one looks pretty good. Still holding the 50. If I hold the 50, I would probably actually look for this and maybe a little more. I'd maybe still look for a higher high. Maybe 43, maybe up in this area. I don't know. We'll see. There's still some bullishness out there. We can find some strength, but we got to be much more discriminate in finding it. NVIDIA, no. Right? No, there's nothing there. It's in consolidation mode right now. Same with Palantir. We already had been like, no, this one could break out easier. What do I mean by that? The consolidation has lessened. So it's like if this just pops up and then comes back, yeah, I'd be like, heck yeah, let's go. Let's ride. Okay. PM, Philip Morris, defensive. Setting up, pinching. You'll notice that some of the best looking things we have are consumer staples, which are defensive stocks. And that's part and parcel to the characteristics of the market that we've noticed as well. PRMB, ooh, it was holding. I still like PM, but PRMB is new. You can see we've now broken the 100. It's kind of dipping. I don't know. No reason. We have plenty of defensives to watch. That's off my list. The Q still in there. Consolidation there. Roblox. Roblox is really starting to fall apart. Some of these that we were liking quite a bit. Reddit. All the way down to the 200 there, right? If they rally and can't regain some old highs, those are ones I might think bearishly about. Rocket Labs, flat. SE, I think this looks actually quite strong as this pulls back. Plenty of opportunity for an entry through here. We'll see what happens. My favorite as of now, I'm looking forward to is, or I'm looking at potentially is Coke, KO. Talent is rolling over. I got to tell you, I'm looking at this one almost. Bearishly. Yeah. Now that our postures dropped down to a 1.25, we had a big round of sellers, small round of buyers, a little bit of a flag type pattern, and now what's going on? Rolling over, and this is breaking down. Yeah. Maybe this is meant to be a $10 or $11 stock, not a $13 stock. Okay. So that's the kind of thing that if I am going to go bearish, I'm going to look for that. 1 minute. I'm going to go a little over today, but not much, just a little. Toast. Nope. TPR again. As soon as it fails, we bail. So we don't see this nastiness come about. Tesla continues to just... I got to tell you, I was looking for one more day here to the upside. And then the next just couldn't. Would have been great. Okay. Taiwan Semiconductor down. Twilio down. Bullish dollar down. Dollar doesn't look great right now, which is good. It's helpful. Visa. I think Visa looks really strong, actually. Visa looks great. Just made new highs. If Visa turns, I definitely see a trade on that one. Yeah. Like I said, it's not defensive, but it has some defensive qualities about it, which is helpful. There's the VIX pushing at 26.5. Walmart. Remember, we said Walmart might be something that we're interested in. I'm going to say no. At this point, we've broken the 50 even. Last one, XYL. This thing's flat. I don't love it. I'm bailing on it. It's off the list. You're off the island. Okay. That's the list. Okay, I think you could literally make an argument for some bearish setups, for some bullish setups. Balance, risk under control. Be quick. Be fluid. Right? This is not the market that you're looking to ride things out. This is the market where you're looking to bail and be done on things that aren't developing the way that they're supposed to. Other than, of course, first thing in the morning. Trading plan, section 8. Setting goals. Let's talk about them. Post your goals. Maybe you have a goal about completing your trading plan. Maybe you have a goal about, just put them out there. Put them out there. I'd love to see them. Let's talk about it. Otherwise, I do think, unless things fall apart here over the next little bit, KO might be coming out. I like the way that one looked. We've been looking for something defensive. That's a nice representation of what we were looking for. Good positioning for it. So keep an eye on that. I also like Visa, but I also think if this tries to rally and fails, there's going to be additional bearish opportunities. So, don't be afraid of having things on both sides. Good to see everyone. Have a great rest of your morning. I'll see you tonight. Let's have a Q&A for an hour. 8 p.m. Eastern, 6 p.m. Mountain, 5 p.m. West Coast. It's good to see everybody. As always, happy trading.
Recording stopped.